Private Money Club. The Private Money Club is the community of borrowers and lenders and borrowers that are in the Private Money Club that are solving each other's problems. Because I told you when we first started this entire thing, we teach you to take back control of your money and solve your money problem. But every single person that's on here right now has a different money problem. Would you agree with me to that? Everyone has a different money problem. Even if you have millions of dollars in the bank, you got a money problem. If you're tens of thousands of dollars in debt or more, you got a money problem. If you're just getting by, you got a money problem. Everybody does. It's just a different money problem. Hey, welcome to Webinar Wednesday. This is Stephen Nagy, so I'll be hosting today, and we are going to be getting into what is Money School, what is the Money Multiplier, what is Private Money Club, what do you guys do to help us? Like, why are we here? Why am I on this webinar right now? And I've been getting this more and more lately. So our whole team right now is on their way out to Sundance, Utah, where Chris Naugle is launching the Private Money Club. And we're going to talk about that here today as well, and what the Private Money Club is, who it's for, and why it might be something you want to be involved with. But on top of that, we're going to get into how you can take back control of your money and solve your money problem. And at the end of the day, that's what we do here at the Money School. That's what the Chris Naugle team does on a day in and day out basis. And so the whole team is flying out to Sundance, Utah right now to not only launch the Private Money Club app and new site, but also to have our I don't know how you would say, we do it 3 times a year, but what we call the experience, which is our mastermind event, our high-level mastermind event, where we get the best of the best, the business owners, people want to take their business to the next level, and we meet 3 times a year in different places around the country. So our whole team's flying out there right now. Chris is already there, everyone else. So Shauna said, Stephen, you're not flying out there till Thursday. So what do you want to do on Wealth Webinar Wednesday? And I said, you know what? Let me just get into what we do, because I've been getting that more and more lately. Like, you guys have so many different trainings and webinars and things that you teach. Like, you know, what exactly, how does it come together? Like, how can that help me? Like, how can I maximize everything that you guys are teaching and everything that you guys are doing? How can I be a part of it? So we're going to get into that a little bit today, what that looks like and all the different avenues and areas, everything surrounding money. All right, so as we go here today, I want to make this an open discussion. So I moved my whiteboard back here so I can draw some stuff on it if appropriate. But I want you guys to help me drive this today. I see a lot of people commenting right now that have been following Chris, myself, the Money School for several years now at this point. And so I know a lot of people on here have experience. They've been to our masterminds. They've been to our training events. So I'd love to hear from you, but I've also love to hear from anybody that's new on here right now. You know, maybe this is your first webinar that you've ever been to, or you just started following us, and maybe you don't know why you're here, and that's what we're going to get into. But I'd love to hear your thoughts on some of this stuff. So as we go, please interact with me in the chat box. And then also any questions you have, put those in the Q&A box, and I'm going to answer them as they come up. So any questions you have about becoming your own bank, or, you know, what we do with controlling money, throw that out there. I'm going to answer all of that for you here today. So that's what we're going to go over today. I have a loose agenda, but I'm going to let it be driven by how this conversation goes and what you guys want to hear. So if you would, just in the chat box, if you're new, kind of like Nathaniel just did, just write new. If you've been to our masterminds or our 3-day trainings, or you're already being your own bank, write BYOB. If you've been with us for a while now and you're really grasping it, so either put new or BYOB in the chat box. I'm just curious who all's on right now. And yeah, so Sal's asking that right now, actually, who makes up the audience on this call. So Sal, if you look over in the chat box right now, you can see a pretty good mix. We have a lot of people that have been becoming their own banks and attending trainings and following our webinars. And we have quite a few people that are brand new to this. So it's a very large mixture, that's for sure. So can we talk about Blackstone pausing on rental investments? Yeah, we could talk about real estate and what the market's doing and different ways to look at real estate. So Jim, definitely remind me of that whenever we get to the discussion on real estate, specifically around Private Money Club and what we're doing with Private Money Club, some of these new funds that we're launching right now, and our thoughts on the real estate market. Let's definitely talk about that. I can talk about what Blackstone's doing, why they're pausing some of these larger hedge funds and institutional buyers, what they're doing, and why. We'll definitely talk about that. And again, any questions or anything, please put those in the Q&A box or discussion topics, because the chat box, when I ask questions, it gets going crazy. So I don't want to miss anything in the chat box. Like I said before, so what we do, Chris Naugle, myself, our entire money school team, what we do is we teach you how to take back control of your money and solve your money problem. So what does that mean exactly, right? So let's start with take back control of your money. When you think about retirement, traditionally speaking, where have you put your money for retirement? So just put your money. Let's start with control, okay? How do we control our money? So when you think about like retirement or investing, like what have you typically done in the past? Put in the chat box, what you've done. For example, does anyone on here have a 401k or an IRA? Maybe index funds, Robinhood, kind of 2A. Would be a financial advisor. So a lot of people will take their money and they'll, give it to a financial advisor, let a financial advisor manage it for them, or a stockbroker, or they'll just go on to something like Robinhood or one of these, online trading platforms. They made it very convenient with things like Charles Schwab and Fidelity and Robinhood, and for the everyday person to go on and buy index funds and stocks and options and be able to trade actively themselves. So we get, I'm sure a lot of you on the phone have, done this kind of thing as well. Where else? How about a savings account? So does anybody on here right now have a savings account at like Wells Fargo or Chase Bank or whoever you do your banking with? A thrift savings plan. Yeah, so that would kind of go up here under what we call qualified funds. So these are some of the typical things that people do, with their money. Maybe I can do a house, real estate. Not just real estate. What I'm talking about, what most people will do is their own home. So a lot of people will say, you know what? Well, I bought my own home. I'm a homeowner now, and I'm taking advantage of all the things that home ownership have, right? And that's very common, where people will, I saved up for a down payment. I put it in, I bought my own home, and, and I'm just going to upgrade through the years to bigger houses. So that's where a lot of people's money goes, right? So this is all stuff. And so when I look at this right here, and there's some good stuff coming through under the mattress, silver, if you're buying precious metals already, that's awesome. Todd said money market accounts, CDs. CDs are a big one, right? So that would go under here. CDs, money market accounts. Absolutely. CDs, money market accounts are big ones. So when I look at this list right here, this is what about 95% of people are doing with their money as far as trying to grow it, trying to invest it, and what that looks like, okay? And Mark right now wrote HELOCs in the chat. So HELOCs are actually more of an advanced strategy. So if you're already using HELOCs and you're using that money widely, then bravo, because we're going to talk about that today also. But this is what most people are doing with their money. But when I look at this, all this looks like to me is I'm giving up control. Okay, I'm giving up control doing all of this right here. So what do I mean by that? Well, the 401ks, your traditional IRAs, your TSCP accounts, those are all tied to the stock market. Okay, there's no other options. The stock market, or maybe you can buy some like bonds or treasuries in there, but typically it's the stock market when you think about growth. Okay, index funds, Robinhood investing, online trading platforms, financial advisors, CDs, or not CDs as much, but the rest of these financial advisors, that's all going to be tied to the stock market typically. CDs and money market, these are typically going to be fixed rate accounts, fixed rate, even like annuities, fixed annuities. But with these things, we're giving up control because, if you have a 3-year CD and you take the money out after a year, guess what? You get penalized for that. If you have a fixed annuity, well, there's a big cash surrender value period where if you pull the money out early, you take huge penalties and losses for doing so. So we're giving up our money on this stuff. We're giving up our money to the stock market. In these 401ks and these IRAs, we're giving up control of our money until we're at retirement age, 59 and a half years old. If I pull my money out of here earlier than that, then I'm going to get penalized an additional 10% just for pulling it out early. So I'm giving up control of all this stuff. In a savings account at the bank, The bank now has my money. The bank is using my money, leveraging my money, making what are called spreads, which we'll talk about here in just a second, off of my money. So the banks are getting full benefit from my money. So I'm giving up not control of my money to the bank. Well, I am. I'm giving up the investment control because I'm letting the bank take my money and invest it, and they're paying me basically zero in interest while they go out and they make all the money. So I'm giving up control. Real estate with your own home. Do you really own your own home? No. If you don't pay taxes on it, the state takes it from you. If you don't pay insurance on it, the bank takes it from you. If you don't pay your mortgage on it, the bank takes it from you. So even your own home isn't necessarily controlling your money, because if you don't do the stuff that you comply with, it's somebody else's. So this is all things that we look at that maybe this was thought of as a good way, but it's what most people do, and it just ends up not working out. And the reason why I know that is we look at different studies. And one of the studies that we looked at recently was the Social Security Administration. And they came out and they said, if you take 100 Americans in this country right now, only 5% are going to be able to retire financially secure, meaning 95% of Americans in this country are not going to be able to retire, the way, the lifestyle, and the age that they want to. Meaning they're going to have to push back retirement, or they're going to have to live a less retirement than they wanted to, or they're going to have to drastically change their lifestyle now. See, I was a financial advisor before I got into the investment and entrepreneur mindset and world. So as a financial advisor, this is what I did. This is what I would meet with my clients about. And so what I would do is I would build up, what are your goals? What are your dreams? Tell me about what retirement looks like for you. And then it would be my job to take, where are they now? What do those dreams look like? And get them there. Unfortunately, for almost every single client that I had, it was not going to happen. Where they are today and where they wanted to be for retirement never lined up. What we would have to do is we'd have to say, okay, well, you're either going to have to push back retirement, you're going to have less of a retirement, or you're going to have a less of a lifestyle now, meaning you're going to have to save more so we can invest more so we can get you to where you need to be, or we're going to take what you're doing now, we're going to take on a lot more risk to try and get you up where you need to be. So there's always this give and take where, if I don't want to put more in, then I got to take on more risk. Or if I don't want to take on more risk, I got to put more in. Or if I don't want either of those, then I got to push this back. And so it came to a point where I didn't really feel like I was helping too many people. And when we look at what's going on right now with the stock market and the volatility and everything, a lot of people right now, you might be on right now because you're awakening to this right now. You're saying, man, my 401k is down 30% this year right now. Or man, I've been watching my retirement accounts or my stock accounts, my brokerage accounts, and everything's way down right now. And I don't know what to do, or I'm starting to panic because I need that money coming up for retirement, or whatever the case might be. So what we do here at the Money School is we mimic what wealthy people do. We mimic what the banks do. We mimic strategies and techniques that have been used for 200 years, and we implement that in our every single day lives. See, by becoming your own bank and following what we teach you to do, you're not going to work any longer. You're not going to work any harder. You're not going to take on any more risk. You're going to change one thing, and that's where your money goes first. Okay, so we're going to talk about that here today and exactly what that looks like. But I just want to lay out, this is all about control, and this is what most people look for. So let me show you the Money School way. Let me show you what we teach and what we do for ourselves. All right, so let's start at the top of that list again right now, okay? So number one on that list was 401ks, IRAs. So these are what are called qualified funds. Okay, well, these are what are called retirement accounts or qualified funds, things such as IRAs, 401ks, SEPs, simples, HSAs, all these different types of qualified accounts. So what is a qualified retirement account? What is an IRA and a 401k? A SEP is simple at the end of the day. Well, what these are special agreements that the United States government gives us, the people, that says if you put your money into these retirement accounts and if you abide by the rules of these retirement accounts, that we will allow you to grow your wealth through investing, either tax deferred or tax free. Okay, so let's talk about that. Tax. So we have what's called a traditional, and then we have what's called a Roth. Okay, so all of these different types of accounts, IRA, solo K, SEP, simples, HSA, etc., all of these can either be a traditional or a Roth. The difference in this is deferred. Traditional is tax deferred growth. A Roth is tax-free growth. So those are the differences. What most people do is they have their 401k at work and they start putting their money into that, and the company matches it, and they give options of these different funds that they can invest in, index funds and lifestyle funds and all these different types of things. Or maybe you have an IRA you're putting money into, and you're playing the markets and trying to be smart with it. Or maybe you needed a tax break one year and dumped a bunch of money into a SEP, but now it's in the market, and that 20% you saved in taxes last year is now down 30% this year in the market, and you're hoping it comes back up, but you're looking to take advantage of this. But here's my biggest problem with this stuff is number one, first off, like I said, we're giving up control. Because if I'm 39 years old right now and I put my money into one of these things and I want to pull it out before the next 20 years when I'm 59 and a half, if I want to pull it out to buy a house with it, or if I want to pull it out to go on a vacation or start a business or something like that, guess what? They're going to penalize me an extra 10% for taking that money out early. So I'm giving up control of my money. And then, like I said, it's mostly invested in the stock market. So you're kind of tied to that and you're stuck riding that volatility of the stock market. And then also in the traditional, it's tax deferred growth, but you're going to pay taxes on it at one point in time. And what do taxes seem to always do? Taxes seem to always go up, right? So we're giving up control of our money to pay taxes later on when taxes might be higher. So there's a lot of issues that I have with that just as a general strategy. Now, Roth IRAs, especially if you can do what's called a backdoor Roth, where we take an old traditional or old 401k and we convert that into a Roth for you, and now we start investing that money and all that growth becomes tax-free, we can definitely do that, okay? And I love that strategy. So there's different strategies we can do with all this as well. But if you're going to have one of these retirement accounts, I do like the Roth because all of the money in there is tax-free growth. So if I put $5,000 into this thing, I make some smart investments this year and I grow it to $50,000, I'm never going to pay any taxes on that $45,000 in growth. So to me, that's pretty awesome. That's the way to start getting rid of taxes, being smart. Now, the way that we can do this, the way that we can take advantage of retirement accounts without giving up complete control of everything is to do what's called self-directed. So what's called self-directed investing. So this is what's called a SDIRA, or a self-directed IRA. You hear this term all the time. And what this means is where a Fidelity Roth IRA or Fidelity traditional IRA or a Charles Schwab SEP account or an old 401k at work or whatever, that's all directly tied to the stock market. The only difference in a self-directed IRA, everything else is the same. The terms, the Roth, the traditional, everything else is exactly the same in the IRS eyes. But what a self-directed IRA allows you to do is control that money and invest in almost anything that you want to. So if you want to do private money lending through Private Money Club, for example, boom, you can do that. If I want to invest in a startup company, boom, I can do that. If I want to invest in a private equity fund or a private real estate fund, boom, I can do that. If I want to buy gold and silver, I can do that. If I basically whatever I want to invest in, I can do with a self-directed IRA. So if you have one of these accounts at Fidelity or an old 401k or something like that, all we have to do is a direct transfer to a self-directed custodian, and now we can control that money and invest in whatever we want while taking advantage of the tax deferred or the tax-free growth that comes along with it being in one of those retirement accounts. There's no taxes for transferring the money. There's no penalties, there's no fees or anything like that. It's just establishing and opening the self-directed account and then getting the transfer done, which the self-directed custodian will do for you. Now, there's a lot of self-directed custodians out there that do this. We work with a company called Horizon Trust Company. So if anybody would like information on Horizon Trust, I can connect you with our expert over there so they can talk about your situation. Just let me know. And I'll connect you with them. So what we're going to do today, guys, is as I introduce you these different concepts and ideas, if anybody wants additional information, just send me an email, whatever email you have for me. I'll put one in the chat box, or you can send me a text message, and I'll be sure to get you over all this information or connect you with whoever you need to be connected with. Okay. And that's throughout the day today. So I don't see questions coming through. So that's just a general idea of how we're going to control that first line item, which was the qualified accounts. All right. Again, this is everything we do in Money School. And there are strategies for this stuff. So we can talk more strategy. Today, again, is just more of an introduction. Okay, so now we're controlling qualified funds. Well, number two, if we just look at cash and cash flow and money, anything that's not in a qualified fund or it goes into retirement dollars is all your other cash, right? So that's our cash flow that we have coming in every single day. So we can call this non-qualified. Other investments outside of retirement accounts, things like that. So this is everything else. So you might be thinking to yourself, well, if it's not in a retirement account, I have control over all this stuff, right? But do you really? Okay. So to ask that question, we have to ask ourselves, what are we doing with our money before it goes into all these various different investments and things like that, whatever you're already doing outside of your retirement accounts? And for most people, their income, their cash, their savings, their investments before they make them, all this money goes into a bank. For most people, that income, that cash, that savings, it goes into the bank. It's stored in the bank until they need it to either pay bills, maybe an emergency, or they invest it. Is there anything else you're doing with your money outside of what you're doing with your cash? I mean, that's basically it, right? Life, and vacations, things like that, which kind of is bills, expenses. So that's how most of this usually works. So let's talk about what banks do with our money now for a second. You guys know how banks operate? All right, so let's talk about banks. If we all agree that that's where we're putting our money, I don't see anybody else putting their money anywhere else. If you owned a restaurant and you had friends in town and you wanted to take them out to eat, where would you take them? Your restaurant, probably, right? Or if you owned a gym and you wanted to work out, where would you go to work out? Your own gym. Or if you had a hair salon and get your hair cut, where would you get your hair cut? Your own salon, right? So if you owned your own bank, where would you go to do all your banking? Where would you take your money and go deposit your money if you owned your own bank? At your own bank, right? So why don't you own your own bank yet? And maybe nobody's ever taught you how to set up a banking system. So that's what we're going to do. And that's what we talk about when we teach BYOB, become your own banker. And I'm going to talk about that here right now also, because this is very, very important. So let me ask you this question. If you owned your own bank and that bank had an ATM machine and you knew that every single year that you had your own bank and you owned that ATM machine, that when you go deposit money into that ATM machine, if you could the next day immediately pull out more money than you put into that ATM machine, how many times would you want to go deposit money into that ATM machine? Think about it this way. If you had $25,000 right now, and you knew if you would have deposited at your bank's ATM machine, you could go back the next day and pull out $50,000. And then the next year, you go deposit $25,000 into your ATM machine. And the next day, you pull out $60,000. And then the next year, you put in $25,000. And the next day, you pull out $70,000. How many of you would want an ATM machine like that? Right? ATM in the chat. Now, how many of you that want one of those ATM machines would want a bunch of those ATM machines? You'd want as many of those ATM machines as you could get your hands on. Absolutely, right? So I go back to before, why don't you have your own bank? Why don't you have your own ATM machine yet? And probably nobody's ever taught you this stuff before. So that's what we're going to talk about right now, is how to create this banking system, get your own ATM machine that's going to provide this year after year after year to you for the rest of your life. You guys want to learn that? So we're going to talk about that right now. All right. So before we get there, why would we want to be the bank? Let's talk about how banks work. Let's talk about how banks make money first. You take $100,000 and you go stick it in your savings account. You realize that bank doesn't take that money and just put it into like a box and wait for you to come get it, right? The bank takes that money and they immediately start moving it. So what do banks do with your money? What do banks do with it once they get it? They start lending it, right? So banks lend your money. So they do things like mortgages, car notes, debt consolidation loans, personal lines of credit, all these different types of loans and lending that banks do. So let's think about what banks are doing. So we put our money in a savings account. What is a bank paying us in our savings account? Let's just be generous and say they're paying us a 1% return in our savings account. And then what are banks doing? Well, the national average on a mortgage right now is almost 7%. So let's use 7%. Car notes, I know there's still some cheap ones around, but they're starting to creep up right now. Let's say a car note's 8%. Debt consolidation loan or an unsecured personal loan, something like that, those might be a little bit higher. Let's say 11%. So what did the bank just do? The bank just took your money, they paid you a generous 1% on it, and then they made 7%. So if they're paying you 1 and they made 7, what did they just make off your money? 6%, right? Then they take it, they lend it out on the car note, 8%. That's a 7% spread. Then they take it, they lend it out on a debt consolidation personal loan. What do they make on that? 1 to 11, that's 10%. So if we add that up, the banks just made 23% off the money that we're leaving there, off of our money. And actually, it's a lot more than that. So we actually do the math. They're paying us 1%. They're making 23%. That's like a 230% or 2,300% return that they're making on our money. So this is what banks do: is they take our money and they make what's called a spread. So a big concept and a big part of what you're going to have to understand about becoming your own bank is you're going to operate the same way. You're going to operate your banking system off of spreads. And we're going to do that several different ways that we'll talk about. But just remember that's how banks make money, is through spreads. That's how you're going to make money as well. And there's a website you can go to. Yeah, Todd, 2,300%. Thank you. There's a website you can go to, Bauer. I'll put it in the chat box. Go to BauerFinancial.com. And BauerFinancial.com tells us that banks make between 400 and 1,600% on average off of the money that we leave there. And I believe it's even higher now because of this interest rate environment. But go to BauerFinancial.com. You can read all about the banks and everything that I'm telling you right now and verify what I'm saying. All right, so that's what banks do, is they make that spread. Fair enough? Here we go. Can we all agree that banks know how to make money and they're good at it? Okay. So then what do banks do with their money? All right. So this is something called M1 money supply. So this is the money that banks have. This is money that banks make. They got to do something with it. So what do banks do with their money? Do you guys know? They put it in 2 places. Number 1, real estate. Think about it. If you look at, where are banks' headquarters? You go to any major city in this country and you look at some of the biggest, beautiful, brand new buildings you see in these major cities, there are almost always bank names at the top of them. Banks own them. If you drive down the road, there's banks everywhere, little branch offices on every corner, every few miles that you go, there's banks. Those banks buy that real estate. They want that real estate, so they buy it and they put these branch offices there. If you think about where banks are and how much real estate they own, all that money is going into real estate. Banks know how to make money. Number 2, do you know where banks put their money? Something called BOLI. BOLI stands for bank-owned life insurance. Yes, banks are the largest purchasers of whole life insurance in the entire country. They buy more life insurance than anybody else out there in the country. BOLI, check it out, BOLI. We agree that banks know how to make money and are financially successful. Banks are buying with their money real estate and life insurance. Do you think there's a reason why maybe we should start doing the same thing? Okay, so why life insurance? Let's talk about that for just a second, because we're going to come back to real estate also, but let's talk about life insurance first. If you could vision, or if you could create a perfect investment, what would that perfect investment entail? What would it include? What would the details of it, the terms of it, what would that look like? Throw out to me in the chat box, what is a perfect investment to you? All right, the perfect investment. Number 1, let's see, Blaine said low risk, 0 risk, lots of return. So low, 0, strong returns. Is that fair enough? Strong returns. Low entry. Okay, so low entry. Low entry. Yeah, absolutely. I mean, if there's an investment, that's great, but you need $1 million to get into it and you don't have $1 million. What's the use of that, right? Let's see. Never lose money. Okay. How about, let me see. I haven't seen anybody say it, but how about liquid? How about you can pull that money out when you need it, or if you need it for something else? Would that be something? Because if it's a great investment, but it's in a retirement account, you can't touch it if you're 30 years old until you're 60. For 30 years, I mean, maybe that's not that great of an investment if it's not going to help me for that long. I might not even be here in 30 years. Protection. Lon, I love it right there, dude. That's perfect. So I'll finish with this one. Yeah, and Todd said it too, protected from lawsuits. So protection. Protection. I love it. Oh, and there's one more. Nobody said, oh, there it is. Sherry, finally. Tanya, too. All right. A couple people mentioned that. John also, I see it now. John, what do they say? Tax-free. That'd be great, right? Okay. All right. All right. I love it. All right. So that's perfect. All right. Thank you for all those responses. All right. So that'd be the perfect investment, right? There is one vehicle that I know about in the United States of America that the IRS and the government gives me the rules and the laws around it that allow me to accomplish this. And this vehicle checks off every single one of these boxes. All right. I'm going to go through it with you. This vehicle is whole life insurance, otherwise known as BOLI if the banks are doing it, bank-owned life insurance, whole life insurance. All right. Now, let me show you. So whole life insurance, it's low risk to zero risk. Check. It's guaranteed growth. So there's no risk. That goes along here. Never lose money. Check. I'll put the check marks over here. Check. You can never lose money in it. It's guaranteed to grow. The money you put in there is guaranteed to grow for the rest of your life. You cannot lose money in it. Okay. Strong returns. This one I'll put a circle around because the growth within the policy might not be what I would consider strong or high returns. But when you see what you can do with the money to take on and control it and bring on your own risk through your own investing, we can get those high returns using this vehicle right here. Okay, so we'll talk about that in a second. So for that one, I'm going to put a little circle around it, kind of like a half check for now. Low entry, check. We can start one of these policies for you for as little as 10 times your age on a monthly basis. So if you're 35 years old, you can put $350 a month into this thing, and boom, you're using this vehicle to become your own bank. Liquid, absolutely. All the money that we're putting into this thing, we can simultaneously take it out to use it for whatever we want, for debts, expenses, investments, travel, trips, whatever, anything and all above. We can use it for that. So it's 100% liquid all the time. Protection. Whole life insurance is a protected asset or vehicle. So in most states, it's protected against lawsuits, judgments, bankruptcies, anything of that nature. So the protection is 100%. And number 7 over here, tax-free. All the money that you put into this thing, not only is it guaranteed growth, not only is it going to grow for the rest of your life, not only does it check off all these other boxes, but all of that growth within there is tax-free. And when you look at the tax-free aspect of that, you're going to start helping with these returns, because your returns you're getting in there, when you factor what you would have been paying in taxes, it really increases what those returns look like when we look at actual returns, knowing that they're tax-free. And not only that, but these returns in here, this is why I put a circle around it. Not only that, but these returns are tax-free. They compound. They compound. And is compounding growth on your investments important? I'd be willing to argue it's one of the most important aspects of investing if you really want to generate wealth. You guys have all heard like that old analogy of, would you rather have a penny today that doubles every day for the next month? Or would you rather have $3 million today and you walk away a millionaire? Which one would you rather have, a penny or $3 million? Well, if you understand the power of uninterrupted compounding interest, you're going to take that penny every single time, because that penny on day 31 is going to be worth over like $10 million. Where if you would have taken the 3 million, then you're done with, right? So the power of uninterrupted compounding interest. So when you look at the returns on this thing, it might not be on face level impressive, but when you look at the fact that it compounds tax-free, guaranteed every year for the rest of your life, and you simultaneously can use that money, it's liquid, and pull it out and use it for other investments to grow your returns even greater, to grow your money, keep your money moving at all times, then boom. To me, this now provides very strong returns. So I'm going to put a big check mark on that right there as well. So that's why whole life insurance, that we use it. I don't know another vehicle out there that checks off all of these boxes and looks like that. And if you do, let me know. I'd love to know. And it's not just the banks, that buy whole life. Some of the richest families, the wealthiest families, the legacy families we all hear about, the Rothschilds, the Chases, the Morgans, the JPs, all these different big families and that run and control the world, basically, guess what? They've been buying whole life and using this as a way to pass on wealth and to grow their wealth for hundreds of years. This stuff that we're teaching you right now is nothing new. It's been used for hundreds of years. It's been proven. These are proven concepts. This is just stuff that maybe you've never learned about before in the past. Like when we look at retirement accounts and self-directed investing, there are hundreds of millions of IRAs in this country, and there's trillions of dollars in the retirement system, but less than 4% of all IRAs are self-directed. So 96% of people are still doing it the other way. Why? Because typically they've never learned about self-directing and the fact that they can do that. They just don't know about it. They don't know that they can control their retirement money and invest it outside of the market like that. They don't know about privatized banking and starting their own banking system and creating an ATM machine like that. So let me just show you an example. Let me pull up my screen real fast to show you, because I said before, if you had an ATM machine that you could put this money into, and every year you could pull more and more and more out of it. Let me just give you a quick example of what that looks like. All right, so let me show you what this ATM machine actually does look like. So what's on the screen right here is what's called a whole life insurance illustration. And this is a typical policy. So there's a few things that I want to point out on this whole life insurance illustration. All right, so over here is the age of the person. This is the year of the policy. Then we have in this column right here what's called a contract premium. So this is a typical what's called an illustration. And anybody that has a policy or gets one, you're going to receive one of these illustrations. This is how a policy performs over time, okay? So right here, the contract premium. The first thing that I want to change with this is we're no longer going to call this a premium, right? Remember, this policy right here, this whole life illustration, this whole life account policy is going to be your new banking system. This is where you're going to funnel your money into. Remember I said, we're not working any harder. We're not working any longer. We're not taking on any more risk. We're changing one thing, and that's where the money goes first. So instead of depositing your money into somebody else's bank where they make all of the spread, all of the returns, and all of the money, we're going to filter it into our new banking system where we're going to make the spread, we're going to make all the returns, and we're going to make all the money. And by changing that one thing, it's going to change everything, okay? So what you see on the screen right now is that new banking system. That's your bank. So this premium that goes into this thing is actually a deposit into your new banking system. Because think about it, if I made $50,000 on a real estate deal, I'm excited to go down to the bank and deposit $50,000 into my savings or business account. Well, if I make $50,000 on a real estate deal, why would I not get excited about going down and depositing into my own banking system? I would. And that's why I'm going to consider this a deposit, not a premium, because a premium has a negative connotation, right? We think of premium, it's like, oh, it's a bill. It's something I have to pay. No, no, no. This is depositing your money into your banking system. And when you change your mindset, it'll literally change everything for you. And I saw some people writing in the comments over here, get on YouTube, go to the YouTube channel. You can learn more about this. Absolutely. What I'll do for everybody on here right now is anybody that's on, I'm going to send you a bunch of resources. I'll send you how to access this. We have training specifically how to go in depth about what I'm teaching you right now, the actual details with more examples. But today, again, I wanted to show you an overall picture of it all, okay? But we will get you that detailed training. If this stuff's going over your head at all, don't worry about that. I'm just kind of going through it right now with you. All right. So I want you to start calling that a deposit. Fair enough. We can all do that. You guys get the idea, all right? So those are deposits. Then what we have over here is we're going to look at this death benefit. We don't build these for death benefit. We specially design and engineer whole life policies specifically for banking purposes. So if you want a high death benefit for the most bang for your buck, so to say, go buy a term insurance policy. In fact, this thing has a few years of term on it to keep it from necking, which is just the IRS rules and regulations. So we love term for cheap death benefit, but that's not what we do. This is a banking policy. Is there a nice death benefit on there for the beneficiaries? Absolutely. It's very nice. And that money will be passed down to their kids, grandkids, whoever their beneficiaries are, completely tax-free as well. So that's how you start creating generational wealth and creating a legacy. But let's pull this back and let's talk about what it does for us today, because nobody wants to talk about legacy when we die. What is it doing for me today? And that's what banking is all about. So check this out. So the deposits we're putting into this thing each year, that is completely up to you as well. I mentioned earlier, as a guideline minimum, we would say 10 times your age on a monthly basis. So that amount or more is how much you'd want to put into it. It's completely up to you. And the first year of this thing, we can even put in a bigger amount. So let's say you're comfortable saving and putting away $10,000 a year into a policy, but maybe you got $100,000 sitting there right now. Well, let's dump that $100,000 into this thing, start that uninterrupted, guaranteed, tax-free growth on that $100,000 every year for the rest of your life. And then let's say, okay, let's just do $10,000 a year moving forward. That's fine. So we can design and build this thing basically however you want up front. So this was a female. This was a lady. She's a real estate investor out west, 41 years old. She wanted to put $150,000 in the first year, and then she was good committing to $50,000 a year after that. All right. So that's exactly what we did. So she put $150,000 into this thing. Once she does that, the cash value is the amount of money that we have available to pull out to use. All right. So let me explain that real fast. Money goes into the policy, into your banking system. It starts that uninterrupted compounding growth. This uninterrupted compounding growth, there's two laws of wealth growth, in my opinion, that I've learned. Number one is uninterrupted compounding growth. So it checks that box off, right? Number two, to make money and to create wealth and to really become successful, money movement. You got to keep your money moving. You got to keep your money moving and making more money for you at all times. If you look at your dollar bills as little green army men, like I do, I look at my dollars as little green army men. And if my little green army men are sitting at my home base doing nothing for me, I start to get mad at them. I'm like, you got to get out there and make more spoils of war for me. Go out there and get other dollars and bring them back home to us. So I send my little green army men out there. I get my money moving into various investments and stuff, which we'll talk about in a second. So I get my money out there moving. It goes out there, it makes more money for me, and then it comes back home for me. So this is number two, law of wealth, two laws of wealth. Uninterrupted compounding interest. Einstein said it best. Compounding interest is the eighth wonder of the world. Those who understand it, use it. Those who don't, pay it. Trust me, you want to be using it, okay? And then number two, keeping money moving. So that's what one of these policies does for us, is all of the money that we put in, it starts growing, compounding. And number two, we can simultaneously take that money and get it moving for us. Because what happens, let me pull the illustration back up so I can show you exactly what happens with this. So this cash value that we see over here, this is the amount of money that we have available to take out of the policy to use for things like investing, or if you want to pay off debt. And watch the 60 to 90 minute full money multiplier training that we have. If you've never seen it before, I have a bunch of them on YouTube. I can send you. Chris has a bunch. Brent Kessler, go to themoneymultiplier.com, go to Chris's YouTube channel. I can email it to you. Just let me know. But we go in depth on there, how you can use these things simultaneously to do things like pay off debt while still building wealth, and pay off debt a lot faster. The example we have in the video is a chiropractor that was $430,000 in debt. He had 19 years to pay it off. Using this system and method called the infinite banking concept, he was able to pay off that debt in 6 years instead of 19 years while continuing to build wealth for he and his family. So we give you that example. We show you how to get back all of the money for every car you'll ever buy, drive, and own in the future on that training video. And it's free. Don't worry. We don't charge you to watch this stuff. It's all free of charge. So watch that. If you have any major purchases, if you're in real estate, roofs or kitchens or cars or boats or airplanes, any major purchase in your life, how to get back every single dollar for those things using the infinite banking concept and what we're teaching you. Or if you're like me and you're investing and growing wealth, this is the ultimate strategy because it allows you to do both of these things simultaneously. It's not either or. It's not I'm putting my money in here or I'm investing. It's I'm putting my money into here and I'm investing. That's the best part about it, okay? So if we look on the screen over here, this is the amount available that we have to pull out of the policy to get moving to use for one of those various things, okay? Or for whatever you want to use it for. Paying bills, expense, whatever you want to use it for. All right, that's what's available. So you'll see she puts in $150,000 and she only has $132,000 available. So number one, you'll notice you don't have access to all of the money right away. This is not a sprint. This is a marathon. But I think if you follow me here for a couple more minutes, I'm going to show you on this illustration that once you get past the first few miles, you're off to the races then. And if you've ever kind of ran a race or a marathon or something like that, you're running and, you know, or even if you just exercise, a lot of times when you first start out, you're like, oh man, my back's sore, my legs are hurting. And then what happens? You start getting into a flow, you start getting into that rhythm. And then you're boom, 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 boom. And then before you know it, you're at the finish line and boom, you finish the race. And you don't even know where the time went. This is the exact same way. That's life. I mean, how many times do you look back on life and say, man, I can't believe that was 5 years ago or 10 years ago, or here's a better example. How many of you have ever had on here $1 million idea? And what I mean by that is you were in the shower one night or you were walking through the house and you were like, oh, I got this really cool idea. Like, what if I did this? Or what if I did that? Or what if I invented this? And you're like, who can do that? I'm no inventor. I'm no business owner, but it's a cool idea. And then like 2 or 3 years later, all of a sudden you're looking on TV or you're reading a magazine, you see an advertisement for that same idea that you had several years prior. And this person you see is making millions of dollars off of it and selling millions of products from it. Has anybody ever had one of those before? So life comes at you quick. And if we don't take advantage of opportunities, we don't take action when this stuff pops up in front of us, a lot of times it's too late. And then we're looking back and saying, man, where did the time go? You don't want to do that, right? So it's all about getting started. But watch what happens once you do start this. Again, this policy right here, the person that started this, they had to do something with their money. They would put it in somebody else's bank or they put it in their own bank. Let me show you what it does putting it into their own bank. All right. So the second year, they put $50,000 in. Now they have about $48,000 available. So a little bit less, but almost the amount that they put in, right? But look what happens in the third year of this thing. They put $50,000 in. Now they have over $50,000 they can pull back out to use. Now, just to clarify real fast, when you pull money out of this policy, you're not actually withdrawing it. It does come out in the form of a loan. But what we want to look at is we want to look at what we talked about earlier with banks. How do banks make money? Off of spreads. How do we make money? Off of spreads. So it's the same thing. So what we do is we have a loan rate on this policy that is less than what our money is in the policy compounding at through the annual dividends. Okay. And so when we look at the simple interest loan versus the compounding dividends we get within the policy, we're able to make that spread off of our money. And then also, not only on top of that spread that we're making, we're then taking that money and let's say we invest it, which I'll show you an example of this just in a second, where we're making even a greater spread by investing our money from using it in this policy. So I'll show you that in just a second also. But I just wanted to clarify, when the money comes out, you're not withdrawing it, you're taking a loan. But that's what allows all of this money, where's the cumulative? That's what allows all of this money all the time to compound uninterrupted within the policy tax-free for you by taking those loans. So that's why that happens. Does that make sense to everybody? All right, so let's keep going with this thing. Remember, it's a marathon, not a sprint. So the fifth year of this policy, they put $50,000 in. Look at this. Now they got $56,000 they can pull back out. The seventh year of this policy put $50 in. Now you're pulling $63,000 back out. Look what happens when she's 52 years old, 12 year into this policy. She puts $17,500 into this thing. Look how much she pulls back out, $47,000. Somebody can do the math on that for me, but what's the cash on cash return? If you put $17,000 in and it grows by $47,000, means we made a $30,000 profit on that deal immediately. And remember, I put this in within 30 days, I can pull this back out. I put this in within 30 days, I can pull this back out. So what was I talking about before? An ATM machine. So this is your bank and this is your ATM machine now. All right. Put 17 in the next year, pull back out 49,000. Put 17 in the next year, pull back out $51,000. And look, she's only 54 years old here. This is only the 14th year of the policy. How long is she going to live? What is this going to look like? And I don't have the rest of this illustration. I don't have a screenshot of it right now. But if I showed you the rest of this thing, these returns get stronger and stronger and stronger and stronger every single year for the rest of her life. So how many of you would like to have one of these ATMs? What do you have to do to get one? Well, you got to start a policy today. You got to put your money into your own bank instead of somebody else's bank. And over time, you'll have one of these ATM machines. Guaranteed. Okay. Plain and simple. And then I asked before, how many would you like to have 2 of these ATM machines, 3 of these ATM machines, 4 of these ATM machines? Me, I'm starting my 4th ATM this year. See, I started my banking system about 3 years ago. And since then, I've been adding additional policies to my banking system. So I opened one of my son. I opened one of my wife. I'm opening another one of myself this year. So I'm going to have 4 ATM machines like this in my banking system that every year I can put money in and every year I can pull money out to use. And it gets stronger and stronger and stronger every year for the rest of my life. Real fast, I can talk about HELOCs and home equity agreements because that is coming up with the next topic. So we'll get to that. Before that, how does it work for retirees? Well, using what I just showed you on the screen, Bigger Pockets, I don't know what your name is, but you're coming through as Bigger Pockets. In retirement, using your banking system as a strategy for retirement, well, later on, we can start taking loans and never repaying them. We can have the policy fund itself. We can RPU it where it pays us the distribution strategy. We can start taking the money and like what I'm doing specifically is buying things like real estate and different loans and stuff like that that are generating income on a regular basis. So there's a lot of different strategies and things you can do with these for retirement. It just depends on your situation. But yes, our mapping team does do retirement planning for people and create retirement maps for retirees all the time using these banking systems. So hopefully that helps answer that question. Irish said, my colleague says IULs are the same. No, so this is nowhere near the same as an IUL. IULs, I'm not going to write it all out, but we have some really good videos on that if you want to see it more in depth. But IULs typically have typically have increasing cost of insurance each year. So a whole life, what insurance costs me today will be the same when I'm 80. With an IUL, it's an increasing cost of insurance. So insurance goes up each year, which means the cost of the policy increases each year. And if the gains within the policy aren't keeping up with that, that's what causes IULs to lapse. That's why people that are expecting to have all this retirement money in an IUL and they look at it 10 years later, 15 years later, it doesn't match up and they don't have it, what they thought they were going to have in it, and they don't perform that way. And I'm guarantee you there's a bunch of people on here that have old IULs that hate them, or they're not happy with them, or they're looking to do something out with them, or they let them lapse because they were useless. And if that's you in the chat box, put it, because I know I talked to a lot of you before, and a lot of you have had these things in the past. Also, IULs, you're not going to get this kind of this kind of stability. There's no guarantees on an IUL, guaranteed growth. Yes, there's a floor, but just because you're getting a 0%, you're not losing money, doesn't make you're making money. So if we have 3 years of a bear market, if we enter a recession right now, guess what? You're still paying that increasing cost of insurance every year in that IUL, but you have 0 growth. You have 0. You're not losing money because of the floor, but you're not making money. So you're having to put more and more money into this thing just to support it, just so it doesn't lapse on its own. So there's a lot of reasons, but those are just a few of them right there. IUL should never be used for the infinite banking concept. I would personally never own one, so I would never sell one. And I could go on and on about that for days, but those are some of the basic answers right there. Yeah, and if you have an old IUL or something, I'm happy to look at it for you, tell you what it's doing, tell you if you can use it, or give you options for what you can do with it if you like to possibly, do something outside of keeping it. So we're controlling our retirement funds through self-directed. We're controlling our cash, our income through whole life. It's known as the infinite banking concept, or BYOB, okay? So we're controlling all of our cash flow and income that way. And then number 3, this isn't as much control as it is more leverage, I guess, okay? So when we talk about leverage, what we're gonna be talking about is, what do we currently own? What do we currently have? And how can we maximize what we have already into more wealth, into more money, into more investing? Okay. And one of the most common examples of that is a HELOC. Or what Mark was asking about with Quantum RE. Quantum RE is a company that offers what are called home equity agreement loans. Okay. And I'll talk about the differences of those just in a second. Okay. So what a home equity loan is if you purchase the house at, let's say you bought a house for $250,000, 5 years ago, and that property value has gone up. Okay, let's say it's gone up to today $500,000, which that happened to a lot of people in the last few years. The market has really gone crazy. All right, so you bought it at 250, you now own it at 500. And let's say that your payoff on that thing is $200,000. So you have a $200,000 mortgage on the property. So your equity in that home is $300,000. So the equity is what you owe on the asset, or it's what the asset is worth minus what you owe on that asset. And that equals what's called the equity, okay, in that property, on that house. So right now, if you didn't know about things like HELOCs or home equity agreements, Tanya, I'll hit that in a second, then that equity that you have in your home right now is not doing anything for you. It's in the walls, it's in the studs, it's in the ceiling, so to say, right? It's just there. It's part of the house. It might be a good feeling to have equity in your home, but where's the advantage of that, right? So what we can do is we can go to a bank or a company that will let us access that equity. And so there's different ways to do that. You can do a refi, what's called a cash out refi a lot of times. So what you do is you take your $200,000 mortgage, you refinance it at, let's say, 500 or 450 or whatever, and then you get the cash out as the difference. So then you can use that cash for whatever you want. Now it redoes your whole mortgage and starts it over, and there's fees typically involved and all that stuff. So, cash out refis made a lot of sense when rates were very, very low. Over the last couple of years. Right now, they probably don't make as much sense by any means, but nonetheless, that's what it is. So that's one way of accessing it. Or you can get what's called a line of credit, HELOC, a home equity line of credit. So what that is a bank says, okay, you have $300,000 in equity. We'll give you 80% of that. What's 80% of 300? I don't know, let's say 250. So we'll give you a $250 line of credit at, I don't know, what's a HELOC right now? They've gone up to like 7% or so. Let's say 7%. So what that means is you now have this line of credit sitting there at the bank. If you use any of the money, you're going to pay 7% interest on it. Usually it's interest only monthly payments. You're going to pay monthly payments on it, and you can use the money. So then what we can do is we can go, for example, we could find an investment. Let's say that pays 12%. We're paying 7% of the money. Now we're making a 5% spread. Okay. So not a lot of money, but if I take, let's just do the math real fast. Let's say that scenario right there is what I actually had. Okay. All right. Well, I don't know where my calculator just disappeared on me. So I don't know if you guys can do the math on that, but if we take $100,000 and we make 5% of that money, what is that? How much is that? It's $5,000. Is that right? So $250,000 would be 5, 10, like 12.5. Okay. So we have $12,500 a month. So that's, let's say, a little over $1,000 a month coming in on spread by just accessing the money that's in our house, investing it wisely, and making that spread. I now have $1,000 a month coming in that otherwise was just sitting in my walls. How many of you could use an extra $1,000 a month income coming in? A lot of us, right? Can make a car payment. It can make a student loan payment. It could be money that you start putting additionally into banking systems or retirement accounts or things like that, right? Maybe into a business, a side business, whatever it is. But we just created by doing nothing more than tapping into equity in our home over $1,000 a month income. Okay. So it can be as simple as that. Now, here's another option. That's a HELOC. That's how a HELOC works. A home equity agreement loan, or a home equity loan agreement, a HELOC they're called too sometimes, whatever you want to call it. But what that is this is a company that's going to give you access to the equity in your home, but you're not refinancing the property. It's not a line of credit. They're giving you the money, but the terms of that agreement say you don't have to pay us back right now. You don't have to pay us back monthly. You're not paying any interest. But when you go to sell this property, you're going to pay us back the money plus interest then. So the cool thing about that is if you take the money out of this home equity agreement, you go invest it at 12%, you're not just making $1,000 a month spread, you're making the full 12%. So what does that look like? That's $2,500 a month. $2,500 a month that you now have coming in by taking that money from that equity and investing it out at 12% annually through like a private money loan, just as an example. All right. So then you look at yourself, okay, would I rather have the line of credit and make the spread and not give up the equity of my home to somebody else? Or am I willing to share in the future equity of my home later on with somebody else so I can make more money now and make the full returns? So just some different ways to look at that. And we will get more in depth on all of this stuff, guys. Okay. So we do have a 3-day training coming up also. Let me put that in there because we do have Matthew Sullivan of Quantum RE that does these home equity agreements. He's coming on to our next 3-day training class, and that's coming up very quickly. So if anybody wants to join us for the next 3-day training, there's the website and then discount code. I'm going to give you guys a discount code just because I love you. Virtual discount. That should work. So if you put virtual discount in there, it's $100 off. And we're going to change that soon. We haven't even updated the site yet, but Tyler, our marketing guy, told me that was still working this morning. So I'm going to use it for you guys right now. So if you want to get $100 off, I would go do that today, because why not? And we do record the entire thing. So if you can't make some of it or any of it or whatever, we'll give you the recordings right afterwards and you can watch those forever. It's November 11th, 12th, and 13th. But we're going to go in depth on all of this stuff during those 3 days. We bring in experts and it's a really powerful training. I know a lot of you have been to it in the past. It's $297, Tanya, but you get $100 off with that virtual discount code. And then we invite you to one of our coaching calls, monthly coaching calls for free and stuff like that. So it's pretty cool. All right. So if you want to learn more in depth about all of this stuff, then make sure you join us for that 3-day training. All right. So you guys liking this? We're controlling our money. We're leveraging what we can with it. We're continuing to move money. We're taking advantage of uninterrupted compounding interest. So what do we actually do besides providing this education, these trainings, things of that nature? No, Morgan, the 3-day training is separate of everything else that we do. It's not included with Private Money Club or anything else. What does come with Private Money Club is MSTV, which is our 2-hour monthly group coaching. But the 3-day training is always separate. We've been doing this 3-day training. It's called the Money School Essentials 3-day training. We didn't do it virtually since COVID hit in 2020. And we were doing it. We were teaching the Money School Essentials 3-day live and in person before COVID hit. And then when COVID hit, we made it virtual. And we've done, I don't know, 4 or 5 of them a year for the last 2.5 years. So we've done a bunch of them. We've made them very, very good. So they're powerful trainings, especially if you're kind of newer to some of this stuff. If you're like, I get it, but not completely, or shit, Steve, I don't know what the hell you're talking about right now or whatever. It's a great place to go and just reinforce a lot of the stuff that you're learning when it comes to this financial journey of money and investing and banking and self-directing and everything else that we do. So I opened up with this question, what is Money School? Why am I here? Hopefully that's starting to clarify a little bit. Control. It's all about control. How can we specifically help you? So what do we actually do here, right? All right, so let me lay this out. This is a general overview of everything that we're going to be able to do, all right? Number one, the money multiplier, becoming your own banker. So this is the whole life insurance, this specially designed and engineered whole life insurance. Okay, so that illustration I showed you a second ago, that banking system, that ATM machine that you can start using, that is the money multiplier. So that's what myself and my team at the Money Multiplier do all day, every day, is we talk to clients, we strategize, we talk to you about your situation, your goals, and we help develop and decide how much money to put into these policies, into your banking system, how to grow your banking system. And then we design it for you, specially designed and engineered for banking purposes. So I just want to clarify that. These whole life policies that we use for banking, you're not going to go get from your brother-in-law or somebody in your networking group or somebody you've known forever or something like that. Or you're not going to go directly to some insurance company and say, hey, I want one of these infinite banking concept banking. They're not going to know what to do. Okay. Not only that, but once you have the thing and once we design it for you properly, you're going to want somebody to show you how to do it, how to use it. How do I how do I pay off debt faster using this policy? Well, our mapping team that is free of charge is going to give you what's called a debt map. Or if you want to purchase a car and recapture all of the money for that purchase, we're going to create a car purchase plan for you. Or if you want to invest it, we're going to create the plan for moving that money and keeping that money moving. Or if you want to use it in real estate or in your business, or if you want to start a policy for your kids, like you learned about last weekend, where we talked about financial, using this as a financial strategy for college, kids' college education, whatever that is, we'll map that out for you, okay? So number one, this is how we're going to help you become your own bank and control your money through the infinite banking concept. This is free of charge, always and forever. We will never charge you a dime up front. We'll never charge you a dime to talk to you about this, strategize. And we will, as long as you're a client with us for the rest of your life, you will have full mapping services, support and service on a regular basis, quarterly basis, or as needed for as long as you're alive, free of charge, period. Okay. So that's what we do in there. Okay. Number two is money school. So this is financial education. This is some of the different topics that I'm talking about today. So let me just give you real quickly. All right, so this is what money school is on the screen right here. So this is creating wealth multiple ways, because once you control your money and you have it self-directing, you have it in your own banking system, you're leveraging money and you're controlling this, right? Now you got to actually know what to do with it, how to invest it wisely, how to be smart with it, how to take on less risk and make better returns, and all the stuff that goes into investing. So that's what we start teaching through money school. All right, so if you see on the screen right here, we talk, obviously we concentrate a lot on real estate because, let's face it, real estate is one of the greatest ways to create wealth, to create leverage, to create, no matter what your starting position is today. All right. But so these are different ways we can look at real estate. So whether those are flippers, whether those are rental properties, either short-term or long-term, Airbnb, we look at commercial property, things like apartment complexes, mobile home parks, RV parks are getting pretty hot right now. Raw land development, private money loans, private money lending, private funds. We just partnered in a new private fund, Chris and I, with some guys, and we could talk about businesses, starting a business, investing in startups, being a business owner, investing in stocks, but specifically targeting things like U.S. Treasuries, like different options that we can do, stuff like that. Note investing. So note investing is a big one. Maybe we want to invest in crypto and the market goes down and we think it's going to go. So all these different ways that we can create and generate wealth, that's what money school is for. All right, to teach you all this. So that 3-day training that we have coming up, that's what we're doing, is we're bringing in experts in all of these different areas. So for example, in notes, we have one of the top investors in Kevin Shortell coming on. When it comes to leveraging and home equity, we have Matthew Sullivan with Quantum RE. We have a couple of people coming on talking about taxes and how to save money in taxes and asset protection. We have a couple of different real estate investors, some of the top real estate investors in the country coming on, talking about wholesaling and flipping. We have people coming on to talk about self-directed investing in depth and what that looks like. Private money lending. We're going to spend a lot of time on private money lending and underwriting deals and underwriting investors and what that looks like. So that's what that 3-day training is. 3-day money school essentials. Okay. Then we do it through MSTV. 2-hour monthly coaching. So you can join us for that. It's $19 a month. Or like I said, you do get a month for free with the 3-day, so you can come on and check one out. But this is how we start coaching and training. Webinars, YouTube. Yeah, this is all free of charge. This one's $197. This is $19. So very inexpensive, very affordable, very, we try and give away our best stuff for free. And then, to help kind of cover some of the costs for marketing and things like that for our other stuff, we put a couple dollar price tag on it. And the other reason we do that is because we did the money school training for free one time and nobody showed up. And what we found is, and this is from years and years of testing, but when you give somebody something for free, a lot of times they treat it for free. But nonetheless, I think as soon as you come on like one of these webinars or a couple of them, I think you see the value and you'll continue to come on. But this is what we do. So these are the different ways that we train. We do 5 or 6 live webinars every single week free of charge. We put new content on YouTube almost every single day. Again, if you don't have access to all these webinars, or if you don't know all the YouTube channels and places we post content, just let me know and I'll be sure to send you links so you can register for the webinars. You can register on the YouTube channels, get alerts when we go live on them, all that good stuff. So just let me know and I will help you get you to these places, okay? All right, so that's what we do with Money School, all right? This is how we're going to start teaching you. And then we start having tools to actually start, assisting you in doing a lot of this stuff, right? Okay, so here's some other tools that we have. Number one, so those of you that want to self-direct your retirement accounts, we have an incredible relationship with Horizon Trust Company. So we have a dedicated account representative. They treat our clients and customers that go over to Horizon Trust like gold, okay? So you'll get assigned an account rep that's going to help you every step of the way with setting up the new self-directed retirement account, transferring from an old 401k or an IRA over, not getting any penalties or taxes or anything like that. So we'll help you with that. We can help you move that over. When it comes to investing, the Private Money Club. The Private Money Club is the community of borrowers and lenders and borrowers that are in the Private Money Club that are solving each other's problems. Because I told you when we first started this entire thing, we teach you to take back control of your money and solve your money problem. But every single person that's on here right now has a different money problem. Would you agree with me to that? Everyone has a different money problem. Even if you have millions of dollars in the bank, you got a money problem. If you're tens of thousands of dollars in debt or more, you got a money problem. If you're just getting by, you got a money problem. Everybody does. It's just a different money problem. If you're a real estate investor, what's holding you back from doing more deals or from doing any deals, doing more deals and making more money? Money holds you back. Or if you have money, but maybe you just don't have the time to go out there and actually buy real estate or be involved in these deals or anything like that. Well, you can lend your money to somebody that does have the time to go out there that needs your money. They'll pay you a return for doing so, 10, 12, 15+%, whatever the case might be. And so that way the person that needs the money gets the money. The person that has the money and they know they need to keep that money moving to make more money is able to do that, and boom. So that's what the Private Money Club is. And then of course, all the education, support, and the community itself. So that's Private Money Club. Private Money Club today, $997. Private Money Club next week, $14.97, okay? So we're launching the Private Money Club app. All right, so text PMC to 33777 to join us for the launch this Friday. As soon as we launch it, starting Saturday, the price is gonna go up every day for a week until it gets to $1,497. So if you wanna get it at $19.97, do it before tomorrow night, and then the price is gonna go up. That will lock you in annually as well. So it's an annual fee to be a part of the Private Money Club community. And once you're locked in at $997, for instance, each year, if you just choose to renew, it will remain at that $997 for as long as you're a member. Fair enough? So that's what we're doing with the Private Money Club and how we're going to be able to help with that. And then what we do, okay, so we have support. My team is here for you. We're willing to schedule a call, talk to you about your situation, what you got going on, try and guide you the right way. We have some new programs coming up as well, something called the Fractional CFO, something called the Blueprint. This is stuff we've tested in the last couple months. We're working on the programs and the systems for it, and we're going to really start focusing on these things more and more going into 2023. In 2023, we're doing 23 live events across the US. So we're doing 23 live events in 2023, all across the United States of America, and we want to do more. So if you're on here right now, wherever you are, if you have a group of people that you know, if you have people you care about or friends or business associates or networking groups, and you love this stuff that we're talking about with becoming your own bank and controlling your money and everything that we talked about today, our team is willing to fly our team out to where you are and hold an event live and in person. So if you have a group and you want to do this, just let me know and I'll arrange it with you and we'll make this happen for you in 2023. So not only are we going to do our own 23 events, we're going to come out and do other people's events as well. So the support is going to be live and in person in 2023. We're going to continue all the calls. We're going to continue all the webinars. We're going to bring you more and more programs. We do have coaching available. We don't talk about coaching. We don't do it very often, but Chris and I do coach on a monthly basis if it's needed. So if you ever want to get more in-depth personalized coaching, let us know. We can help you with that. We also have really strong partnerships with people that are real estate investment coaches and business coaches and different tax coaches and things like that. So if you do need any help with that, we can guide you to people that we trust, people that we use ourselves. What else are we doing? Private funds. So Chris and I attend a lot of masterminds. We are constantly educating ourselves and creating new connections and relationships to bring to you at the Money School. This is how we find people for our 3-day trainings, for our wealth webinars, for our mastermind events, for everything that we do. We find them ourselves at masterminds through business relationships. So what we do sometimes is if we find opportunity, what we'll do is we'll put together that opportunity and let you share in it with us. So Chris and I, for example, just started a new private fund this week. It's called the Inicio Capital Fund. And it's only invitation only for people that we do business with already, friends and family. And it's Chris, myself, Greg Hurling, Ken Clothier, Justin Colby, as well as a handful of other top investors in this country. They're people that have, if you combine all of our experiences, well over 100 years and well over $1 billion. It's something like over 2 billion, I think, over $2 billion in real estate transactions have been done. So what we're using our experience in this real estate market that's coming up right now to buy property, buy real estate, do these investments for you. And so that way you could take advantage of this market and everything's going on and potentially get great returns. So we're aiming for a return to our investors of the high teens on this particular fund. And there's more details on it and things like that. So if anybody wants to learn more about the Inicio Capital Fund, just reach out to me and I will schedule a call and we'll talk about it. But I'm super excited about it just because one of the reasons I love real estate is you can make money in up market, down market, level markets, whatever, but you can make the most money in real estate when there's crashes, when there's blood in the streets. When you look at what we were able to buy property for back in 2010, 11, and 12, and what we sold it for over the last year or so, it's crazy, right? The amount of growth. And so there's going to be a lot of opportunities, and this team of investors that are running and partners in this new fund, this is what we're aiming at, is being able to really take advantage of this market and get these really strong returns for you, the lender, for you, the investor. So if anybody wants to learn more about that, let me know. It's called the Inicio, INICIO Capital Fund, Tanya, just so you know. But just send me an email and we can connect about that. More than happy to talk to you about it, or send me a text message. So I'll put that in there. All right, cool. So just things like that I just wanted to mention that we are actively doing, that we're finding opportunities and we bring these opportunities to you. So once you're controlling your money, you have the means, you have the ways, you have the tools, you have the team, the support, you have whatever you need to be able to take action on it. Because a lot of this stuff is new, I get it. So you might have fear. You might have people that are telling you, oh, who do you think you are to do this? Or negativity, things like that. Well, fear is overcome through education, through support, by knowing what you're doing. So we're going to continue to educate. We're going to continue to support. And we're going to continue to bring you stuff that works in these markets right now through our trainings, our masterminds, our coachings, and our different opportunities that we have through Money School and the Money Multiplier. So with that being said, guys, I think we're right about at our time limit for today. I hope this made sense to everybody. Let me just see if there's any questions that I can answer real fast, and then we'll go ahead and wrap this thing up for the day. I got to start packing. I leave for Utah at 6 a.m. in the morning tomorrow, and I have nothing ready for it. So I got to get busy with that. Chris said, can you touch on changes to the Private Money Club rules, specifically certain states? Yeah, so Chris, there's 13 states in the Private Money Club that initially we are not going to be able to post deals in. So if you're a lender in those states, this doesn't affect you. But if you have a deal in one of the 13 states, and Florida is one of those 13 states, you're just not going to be able to post deals on Private Money Club right now. But what we're doing for those affected by it, or if you join and you're in one of those states to lock in the 997, what we're going to do is we're simply going to pause your membership until those states come back online. So our legal department right now for Private Money Club is actively putting the pieces in place to bring those states back online for the Private Money Club. So there's like 5 or 6 of them. There's like a handful of states that we're going to be able to bring back very quickly. They were on the borderline of whether we could allow them or not at this time. And just to be safe with everything, we decided to exclude them. But I would say within the next 30 days or so, we should have those states back online. And then the rest of the states, I would say I don't know, man, like 3 to 4 months, maybe. We're working on as fast as we can to get those back on track, but a lot of it's just paperwork and then waiting for the states to process it. And you guys know how that is. The states can really drag their feet and take forever for things like that. So, so don't worry about it unless it directly affects you. And if you guys have any questions, let me know. Andrew, Shauna, Chris, we can talk to you about it, but we will take care of you. Don't worry. We understand it. We're there with you. We're helping you. And we're going to do whatever we got to do. So I don't think Utah is one of the states, Christine, but yeah, we understand it. So no worries there. So you sign up for Private Money Club. You just go to privatemoneyclub.com and follow the prompts. There'll be a place to sign up, privatemoneyclub.com, and you can get started with that. All right, guys. Well, I appreciate you being here for today. If you need anything, like I said, please just reach out to me, and we will send out some resources and stuff with the email recording of this to everybody. So you guys will have the links for the 3-day. You'll have the links for our future masterminds, for the Private Money Club and everything else, my call calendar. But if you need anything in the meantime, please let me know. Hope everybody has a great day. I'll see some of you guys this weekend in Utah. Can't wait. I'll see some of you virtually on the launch party Friday night, and everybody else, we will see you next week for the Wealth Webinar Series. Have a great day. Have a great week. Thank you. Bye.
All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.